Good evening, traders. This is Daud from Elliott Wave Forecast.com. I hope you had a nice weekend and are ready for a new week of trading. In this video, we are going to take a look at the USDCHF, the dollar Swiss pair, and we will see what this decline from the January high looks like. So you see this, we had a peak here in the pair on 21st of January at 91.56, and since then the pair has been kind of trading sideways to lower. Every rally here has proved corrective, and it has resulted in more downside in the pair. So let's take a look at the structure of the decline, which we believe is unfolding as something what we call a triple correction in Elliott Wave. So it is a triple corrective structure. All right, so you can see here ABW, then you got this three wave back in wave X, then we have 1, 2, 3 wave down in Y. So this gives you 1, 2, 3, 4, 5, 6, and 7 swings up till here. Start counting from here. So you got 3 down in W. This is your fourth swing. Then you got 5, 6, and 7. This was a shallow connector one more time in wave X. That became your eighth swing. Now this is your ninth swing here, and if I put up my RSI here on this chart, so we will notice that there is no divergence between this low and this low in RSI. Although you can see some marginal divergence here between this low and this low, but when we change the time frame and go to 120-minute chart, you would see that that divergence is not there. It has been erased, as you can see, which is why this is not a leading diagonal structure, as some would like to call it, or even an ending diagonal, although it may look like that, but there is no RSI divergence here at the lows. So we believe that this is a 9 swing structure here so far, and an incomplete swing sequence, which is why we are looking for another swing lower to complete 11 swings down from this peak, and that is when we're going to see a bigger bounce in USD Swiss. So in case you're wondering when we're gonna see an end to this cycle here, so once we have seen one more low and tested the orange area between 86.42, 86.97. That is when we believe that the cycle from the January high is going to complete this cycle here, and we're going to see a bigger recovery in USD Swiss, which can take us all the way back to this area, back towards the 89.20, 89.82 region. All right. So, however, short term, we remain bearish the pair against this high. 89.31. This is the key short-term pivot point in our system. So as far as the pivot at this high is holding, we do like one more leg lower in the pair toward the orange area, 86.42, 86.97, and that's when we're going to see a bigger recovery in the pair, which is going to be a correction of this entire decline here. Okay, so the drop from 89.31 to this low here around 87.74, we can see it was a 3-wave drop. If the pair made one more low here, it would have become a 5-wave decline, but it did not. So it was left as a corrective decline. However, as I said, the swing sequence from this high is incomplete. So we are looking for another swing lower to complete 11 swings down from this peak here, the January high basically. All right, so this is our swing number 10 in progress. We should be somewhere around here, as this blue arrow is indicating, and we do need one more leg lower to complete the cycle, and then we're going to see a bigger bounce. Now let's take a look at the price action from the lows of Friday. So far we believe that we have seen 3 waves up from that low at 87.74, as you can see here, labeled ABC. Price is currently at the 1.236 extension of the blue A wave. All right. So starting from this area, 83.84, to the 50 back level at 88.52, or maybe in extension 88.70. So we see this as the area where sellers should appear. All right. And they would push prices lower for new lows below here. So the worst case scenario is that we see is that we can see a reaction from current levels. We can see a pullback here and do another 3 waves up, which can take us to like 61.8% retracement and then drop in 3 waves again. Right, so that's of course something that we don't know at this stage, because corrections can always become 3, 7, or 11 swings. So we have 3 swings in place. which means a decline can resume from this area now, 88, the current levels to 88.52 or even 88.70, and then go to new lows towards 86.42, 86.97, or we can see a three-way pullback from here and again test 61.8 fib retracement like this, and then turn lower in three waves. So this view remains valid as far as price stays below this level here, or the pivot at this high remains intact in our proprietary system. So as far as that's the case, we like the short side here in the pair, and we do not like buying the pair. And that's our preferred view in USD Swiss. I hope you enjoyed the video. Thank you for watching it, and for further updates, please visit our website www.elliottwave-forecast.com and sign up for a 14-day trial. Thank you very much.